is this data about? Yes, we are coming live to you out of the interrogation room. We are now in a different room, to say the least. What's going on, guys? I hope you're all doing well. Now, listen, we've just had some very interesting data from the non-farm payrolls. And the story that's caught my attention is the fact that it's coming at a stupid 73,000. Missing estimates like crazy. Now, the data throughout the week has not been consistent. And this is the one thing that has kind of got investors thinking, hold on, Jolt's job openings came in lower, fine. Then ADP non-farm came in higher, awesome. Absolutely smashed estimates. What's going on? It is a ghost town. This is true. The markets aren't really reacting the way you would expect them, but then again, the market is not fully open just yet. And what I'm doing is just giving you this live just to give you guys a breakdown on exactly what we can expect now that we're going into the open very, very shortly. What's going on, my bro? And we're just going to just break down a few things because we've seen the euro has just done an unbelievable switch to the upside. And of course, the euro's trajectory is going to continue to go lower, ladies and gentlemen. They've just come in that they are going to be cutting the rates again on the ECB. And that only means that the euro's yield is just going to be depleting, which quite frankly, after cutting the interest rates nearly 10 times, why would you be seeking yield in the euro? It only makes sense to go over to the dollar. But the dollar, ladies and gentlemen, took an absolute smack to the downside. Where are we at with the dollar right now? Hold on a second. Here we go. So the dollar right now is trading just less than 1%, man. Just shy of less than negative 1%. This is a nice drop, but let me explain. This drop right here, it's not a safe drop. Tina, bro, waiting for Solana about 162, 155. Yeah, you know what? It's all depending on how the market is going to react right now because I'm looking at the NASDAQ and she is still holding around that sub 23,082 zone, but the market's not open yet. And quite frankly, I don't think the market expected the data to be like this. Given the reaction from the marketplace has been zilch. That tells me they were not expecting this data. Okay, they expected a little bit more in terms of the actual non-farm employment. 73,000, they projected 106, and it came in at 73 when the last reading was 14. That is not consistent, and this is the problem that Federal Reserve has. There's no consistency in the labor market because that's really going to demonstrate where we are with regards to the economy. If your labor market is solid, then okay, money's going to be moving around. Then naturally you think that everything's going to be fine and that the economy can sustain itself at these high levels of interest. Yeah, don't worry about the hair. We're not here for the hair. Don't worry about that. Listen, I agree with you to an extent that the volume isn't present. I do agree with you. However, if you go over to the CoinAnk and you actually look at Bitcoin's order flow, we are seeing a lot of commitment on the bid side. That's the thing you've got to take into consideration. There is a lot of commitment on bid side on Bitcoin. If I just flip it over just to show you, ladies and gentlemen, what I'm talking about. This is what we're talking about. Look at this. There's a lot of lot of bids coming in here. And there was this one despicable order down here for 100 million. There, where is it? There you go. An initial order of nearly 106 million and they traded at 117 million. There are big players in here, guys. The thing is, we need to make sure that they've actually got the volume on the offer side up here to back it all up. So that's what we're trying to establish right now, guys, if the volume is going to be present. Yeah, I'm going rogue with the phone streams because I am not going to have a repeat of what happened last time where it was lagging and you were all complaining about it. Not having that. Donald Trump got an itch on his fingers again. Yes, he has had an itch on his fingers again. Just going on the tape itself and having a look at where we are. We haven't seen anything come in just yet, but it says here that traders will resume fully pricing in 2 Fed rate cuts by the end of 2025. When we go over to the actual data itself, it says here that by September, they're expecting a 62.9% chance that we're going to get a cut in 4 to 4.25%. But the bets are still, this is exactly the same thing as it was last month. We're not really seeing a clear difference in investors' expectations of where interest rates are. If we just go over to the yields market and the bonds, you can see that the bond market has shot up. 99 right now, it's going to itch close towards that 100 mark. And what we're effectively looking for is to see if the NASDAQ can follow suit with it. Because if the NASDAQ doesn't move up from here, given that it does have every reason to, Apple beat expectations, Amazon beat expectations, Meta smashed it, Microsoft smashed it. What reason would you not have to go into the market? Now, there are a lot of dip buyers coming into play. Now, if the trajectory for interest rates is going to get cut, just look at the euro. It tells you that when the euro's going down, given that euro, yen, and gold were deemed as safe havens before, investors are coming out of safe havens and plowing into risk on assets. This move, in my opinion, would be deemed as a buying the dip opportunity because we've got CPI data next week. Oh, sorry, on the 14th of August. So when the CPI data comes in and suggests that maybe inflation is coming down, then this move down could effectively be engineered to bring everything back up. But we've got to wait and see how the market reacts to this, because this is probably one of the, it's been a while, but this has been a very muted response to non-farm payrolls. Very muted. Right now, guys, we haven't got the thing of the data is going to tell us where we are with the economy. It's all about whether the data gives investors the expectation that interest rates are going to get cut. That's all they care about. And if this move down suggests that this could be the start of what could look like the Fed pivot, then okay, categorically, the market's going to come down. But if we still got the lackluster data not being consistent when it comes to manufacturing data, when it comes to ADP non-farm and the non-farm data itself, the unemployment rate's only ticked up 4.2%. It's not that much. Even Powell said it. If it were to go up literally maybe just under 1%, then they would probably pay attention to cutting rates at a whim. They're not doing that because we're not getting that data, okay? So that's something you've got to take into consideration, ladies and gentlemen, when you're doing it. Where you can see the real-time bids. Real-time bids are in the CoinAnk. Well, not necessarily the real-time. Well, it is real-time, but you can get much better data when you're actually using platforms like ExoCharts or any depth of market data that shows you on the futures markets where the bids and the offers are coming into play. That's where it is. Tino's in lackluster, yeah, which is because he can tell the difference between love and lust and when he lacks lust. Stacey, calm yourself, man. Okay, is there a 2020 method for Bitcoin right now? Quite frankly, looking at Bitcoin's price action, okay, you've got to consider that Bitcoin has just absorbed it's about 80,000 Bitcoin has come into the marketplace, all right, and they've sold it. So this is the problem that we've got. I think cryptocurrency does a good job of representing whether people decide to put on risk or not, okay? Because if everyone was all happy about everything, Bitcoin will keep on climbing up. And quite frankly, you've got Wall Street backing Bitcoin. That's what you've got. You have Wall Street backing Bitcoin. And that means that any dip that happens, Wall Street are stepping in and picking it up, okay? Space Lord, happy days. Thank you very much for that. Tina, I'm still going over again and again the old videos from 2021. Absolute gold. Thank you for the hard effing. No worries, bro. It's all love. It's all love. Tino, smart money is selling. What happens next? Smart money is actively selling. Yes, that is the case. And we're actually at an extreme right now with smart money. And we have seen what, from according to the chart, it is showing that smart money is starting to pull back ever so slightly. So I'm just going to pull that up for you just a split second. So here we go. So here is the chart right now. You can see here that you've got smart money coming into this point right here, which is deemed as an extreme. Usually when it hits an extreme, that's where the market tops out at the top side of the range over here. And then, of course, this starts to go up. When this goes up, the stock market goes down. Retail right now is over optimistic, so they're going to see the pain of it, of price coming down. And that's something you've got to take into consideration, ladies and gentlemen. When you see price making a big drop to the downside, okay, on any news, okay, then you can say to yourself, all right, how are people going to react about the bigger picture? But the bigger picture says there is inconsistency on whether we get rate cuts or not. All it takes is next week's manufacturing data to suggest that the tariffs are really coming into play. Now, in my opinion, what I think's led this move to the downside is, of course, tariffs. I mean, Donald Trump's put on another tariff on the Swiss. Okay, he's put a 34% tariff, I think it is, 37% tariff on the Swiss. He's just pulling them out of nowhere, and today is the deadline. And he says that he's not budging, but I actually think, and I might just be going crazy, but I think at some point today, right, because we don't know if all these nations are actively hitting Trump and sending letters and saying, yes, we're happy to do a deal at this price and what have you. But I actually believe that Trump's going to come out today and he's going to say that there's going to be an extension. He's going to hit pharmaceuticals. He's going to hit all the other guys as well. So don't worry, we've got those in the coming weeks. So if you guys are actively looking at pharmaceutical stocks, get involved, because you could potentially start shorting those stocks because they're not going to like whatever Trump is going to say. He even had the audacity today to turn around and say to Apple and Google and all the rest of the gang to stop hiring Indian people for labor because it's hurting the US growth. Can you believe he actually said that to those big heavyweights? Like, what is going on? He is not taking any prisoners. He does not care. Where is the real Tino? Come on, man. Listen, I'm here. I'm still here doing the flavor. You might not see the charts, but you guys are looking at the charts right now. How many of you are on mobile phones? It's your favorite Greek gyro. Anyways, let me just go into some other things as well. So we have had some understanding just recently that the FCA, Financial Conduct Authority, has in the UK, right, says that it's going to allow retail access to Bitcoin and crypto ETNs. That's great news because the UK has effectively taken a step back with cryptocurrency and going crazy with legislation. Now they're going to allow people in the UK to start trading, which is exactly what we need, because then we don't have to worry about VPNs and all that BS that comes along with it. Okay, now as we go into the open, ladies and gentlemen, we still got another 20 minutes or so, but I'm looking at Bitcoin's price action. It's currently hovering around the 115,000 region, still below the 116. Just to give you a little bit of an insight into the orders that are coming in, I'm not really seeing that many bids coming in, but I'm looking at some options data on the NASDAQ and the S&P, and of course the market's not fully open for the options. Can't really tell you where we are in terms of gamma and where the actual exposure is in the marketplace. But once that data comes out, then we're going to know exactly where we are with everything. But I'm paying attention to the volatility index, the VIX. The VIX itself is giving me a little bit of an insight into what we could be expecting. It's currently trading 4% for the day. And with it being such an explosive move up, investors have effectively hedged themselves. And now that they've hedged themselves and tried to eliminate the risk, it means now that they're going to try and take advantage of that. As I said before, when it's high, you buy. And because the VIX itself has been hovering around the 20 mark, every time it does go head towards that range, it then starts to pull back. But that for me tells me that there is still a lot of investors sat in complacency when the VIX is not really trending at the sub 30, 35 levels. That shows me that investors are not really concerned about anything. And that's the truth. They're just rolling onto the gravy train. Tech is doing great. I mean, if we go over to Amazon and Apple, we can see that Amazon is currently trading down. It's gapping down at the open from $234 yesterday's price action down towards the 216, even though they've done okay with their earnings. And Apple's also done all right, but they're also gapping up at the open, which comes in at $212.25 at the open. Nvidia, guys, just keep an eye out on Nvidia, man. Nvidia is gapping down at the open. However, it could change as we get towards the pre-market activity. Tesla's coming out with a little bit of a gap down, nothing too serious. But again, as long as copper keeps on going down, that's fine. But you could exploit an opportunity on copper, guys. There is a big opportunity on copper, okay? Shouldn't all this kind of volatility maybe upset the risk investor appetite? No. Let me explain what volatility is. Volatility is, it's either going to be lack of volume, okay, and price just naturally just moves fast when big orders come in, all right? But when you are in a macro-driven environment, because we're not in a trending per se environment, I believe, we're in a macro-driven environment where we need to wait for data to come out, which is going to dictate whether or not in the future we're going to have this expectation. For example, if the interest rates are going to get cut, even though they're saying now there's a chance that there's going to get 2 rate cuts by the end of 2025, then what do you think investors need to do? They need to transition themselves away from assets that they've been plowing into on the inconsistency of the data from the day get-go when Trump came into power to coming out with all the tariffs, and then he's hitting nations with changing economies and what have you. Investors then need to start maneuvering money. And the only thing that you need to keep in your mind is perceived value, because you guys are all going to be buying Bitcoin on the exchange of dollars. Would you be buying Bitcoin right now with your current dollar? Yeah, you would. You know why? Because your dollar is getting close towards an appreciation of purchasing power. When you're getting it at 96 or 91, or for example, 93, naturally you're going to be forced to go into the dollar because you're losing value of dollars. So you're just better off going into Bitcoin. But Bitcoin is a kind of expensive. So when you see, the best way, in my opinion, to play Bitcoin is based off the relationship of your everyday money, which is dollars. And then you put it into Bitcoin when you believe you can generate a bit of value from it on the fluctuations of Bitcoin's price. That's what I think Bitcoin realistically should be. It should be a place where you do store value, okay, and then you take it out. That's why you see so many people trading Bitcoin, buying the ETF, selling the ETF, because they're able to get value, and because of their perception of value in the future is, I expect Bitcoin to be more. Whenever it hits that price point where the expectation is they think it's more, that's when they will take profit and start the same process again. And I said it, Wall Street does not care about the price of Bitcoin. It cares about how much they're able to buy for it and how much they can sell it at a later point, and what is the difference. We all naturally want Bitcoin to go up because our portfolios are stacked with Bitcoin. We want to see it increase in value. But when you truly understand what Wall Street's purpose is with Bitcoin, okay, only when it gets to that significant price point, right, where it can then start behaving like a store of value, is when Wall Street will start really utilizing it for what it's really worth. But my opinion now is that Bitcoin is being used just so people can make money from it. Us dudes in crypto are in the dream and the idea, yeah, Bitcoin to the moon, baby. Sale is the only one that's endorsing Bitcoin, but he's really and truly ripping it apart by accumulating as much as he can, because the way he's behaving is his expectation is that Bitcoin is already at 300,000, 400,000, 500,000, right? So he's got all this purchasing power, this bargaining power to go and borrow off the back of Bitcoin. Once Bitcoin starts to become like that, you're then going to be getting companies wanting to do merger and acquisitions, and they're all going to be saying, hey, show me your Bitcoin treasury balance first before we can have a conversation. That's where I think we're going with Bitcoin. Once Wall Street really gets his fingers into it, looking at these price points for Bitcoin is nothing, in my opinion. You know, it's the utility of it, and it's not decentralization, you know, come away from the bank, not your keys, not your coin. As much as I wish it was like that, if it was like that, Wall Street wouldn't be involved in it. So the only way that they can prevent the man from getting the benefit of what Bitcoin is, they have to get their fingers into it and advertise it as the idea of value in the future. And wow, it's going to cost so much and you're going to be holding lots of Bitcoin. They're violating cryptocurrency, ladies and gentlemen, and that's the truth. The idea of decentralization is done. It really is. You've had a bill converting or discussing the idea of stable coins. You're done now, ladies and gentlemen. Decentralization's in the bin. And you might not like to hear that, but that's the fundamental truth. But you need Wall Street money to get your Bitcoin to $500,000. That's what you need. That's a nice little cool one. Nice comment there, New Richie. Neither does Blackstone, which is a branch off BlackRock. Yes. Tina, will there be any bear market for Bitcoin this time after all the big players stepped in, or is this time it's different? The problem is now that I think that we're going to be having is cryptocurrency with the stablecoin. I think people's attention is going to now be drawn to stablecoins, okay? Bitcoin, in my opinion, is only going to drop down aggressively if there is a freak event, okay? Something freakish would have to happen in the marketplace for Bitcoin to really drop aggressively. Because if you're adding Bitcoin to balances, treasury balances of companies, okay, that's still supply, okay? You're not putting it in a treasury to only sell it the week after. It's something that is going to be planted and left there. MicroStrategy, not selling Bitcoin. And all the various other companies that are selling are buying the Bitcoin. They're buying it on the premise that it's going to be retaining its value in the future. Forget little price fluctuations from 115 down to 90,000. In my opinion, for you to really absorb the idea of Bitcoin's true movement, if you're not in a position, I've said this before, for day traders, it's about 5K in terms of fluctuations on the possibility of what a Bitcoin could move on a day-to-day basis. But if we're talking about holders right now, you realistically have to have a buffer of around $25,000 in price fluctuations on Bitcoin. You've got to be able to absorb that, all right? And I know that is the case in crypto because people were buying Bitcoin at the all-time high and they let it sit until it hit 16K. So it's nothing that you guys ain't aware of or what you could be absorbing, okay? Revise the jobs data to a much lower number for May and this month. Thoughts, Tina? Yeah, this is what I did notice. The data was revised and they did it this week for the actual JOLTS job openings. It originally was projected to come in at 7.49 million. Then they revised it to 7.51. Then it came in at 7.44. And this is the thing that's got investors on the sidelines. They're thinking, hold on a second, man, I'm not seeing what really should be happening with the data. It's not giving them anything. Okay, I'm neither seeing any likes on the live stream. Ladies and gentlemen, what's going on, man? Tino, 10-year yield are going down. Is it a good reaction? When we look at the bonds market, guys, the yields themselves trading significantly lower. This is the catch, right? When you pull up right now, the NASDAQ, okay? If you look at the NASDAQ, it's trading at various lows, okay? It's trading at, where are we at? Hold on. Yeah, we're currently trading at 23,062, okay? The 2-year yield is down minus 4.62%. The 5-year is down 3.72, and the 10-year is down 2.6, and the 30-year is down 1.39. But what's gone up? The treasuries. Because investors now are trying to lock in yield on the anticipation of interest rate cuts. So you may as well lock in the yield now because you're going to lose yield later on, right? However, that's not a solid play, as in it's static. That means that investors can equally then come out of the bonds. If the bonds are going up, but the stock market isn't, investors are seeking low risk. If you start seeing NASDAQ moving up and everything moving up, and the bonds are still moving up, then everyone is seeking risk on, low risk and high risk. But I think because the data's come out, it's given them the idea that interest rates are going to get cut because of how bad the jobs data was. So they've quickly gone into the bonds, picked up yield, which has forced the yields down. Fundamentally, the stock market should be going up by the principle of the bonds. But if you're not seeing the stock market going up, but given that the stock market hasn't moved, that's the thing. So wait until the open, ladies and gentlemen. Give it about 20 minutes. Wait till the market absorbs the data, gives us the open, and then happy days. Start your trading. Bro, you look toasted. I ain't toasted, man. I'm all good. Tina, why did Circle go down? Circle will go down, Circle will go up, but you've got to understand. Let's go and have a look at Circle right now. Circle's price action is still at the 183 region. It's now gapping down to 174, okay? But volume's depleting it. Listen, I said this last time, right? Let me show you. Look, I said last time when Circle came to this area right here, okay? Came in with a move to the downside, but volume wasn't there. So when you start seeing stocks dropping, but the volume is not present, it tells you that it's getting ready for accumulation. They're getting ready to plow into it. Because if the pressure to market lower is not coming from investors selling and it's volume that's not present, then it means that all it takes is just one bout of volume to start the party to reverse it back up. Okay, if the volume's there showing lots of selling and it's distributing, then okay, it's going to continue to go lower because investors are offloading the asset. But in my opinion, Circle, listen, it's going to go up, it's going to go down. But Circle, in my opinion, is going to probably trail around the $200 to 160 mark. Okay, that's where I think it's going to hover. Then we get stablecoin adoption and everything starts coming into play where they start backing stablecoins against the US treasuries. You're going to get that. The White House just released that article talking about on the document, talking about how they're going to approach picking up crypto in terms of adding Bitcoin to the reserve. So it's all going to happen. But what retail mindset does is it sees good news, thinks it has to happen straight away. But what Wall Street does is it sees good news and it starts to prepare itself and accumulate, which is why 9 times out of 10, when you hear some good news, it always goes with the idea of buy the rumor, sell the news kind of story, because they've already priced it in, you know? So that's where my logic is at with stable coins overall, ladies and gentlemen, okay? Tino, is this the crypto site? Tino, Tino, in the data, does it look like people are swapping out of Circle? No, I don't think they're swapping out of Circle. It was a very successful IPO. But what you've got to understand with Circle is it still trades on average 31,870,000 shares a day, okay? It's got a market cap of 41 billion, all right? When this pulls back, it's going to easily grab enough attention. Maybe could lose about 2-3 billion in market cap. But quite frankly, my opinion is this thing is on discount only because of the adoption of what's going on with the stable coins. And like I said, you give Bitcoin a bit of freedom in terms of price action to maneuver around $2,500 to $5,000 a day. If you're playing Bitcoin on the longer time frame, give it about $20,000, $25,000 move so you can absorb it. Can you absorb it? Same thing with Circle. You're just waiting for the adoption to get put to work. That's all it is. There's going to be a lot of price action. Tina, do you think August will be up or down? Seasonally, August usually is a decent month sometimes. But when you look, okay, so let's just go back to when the Japanese yen said they were going to increase their interest rates, and then it got done on the 31st of July, and then the market reacted on the 5th of August, okay, on the Monday. What happened after that? It was yippee-ki-yay. The stock market just flew. 5th of August, stop run to the downside, shift out to the upside. So tell me why this is no different. Wait there. Whilst I'm doing this, be sure to like and subscribe. It's free to do. Here we go. Look at this. Tell me why that is no different to the day on the 5th of August. All right? 5th of August, where we are, 2024. There you go. That right there. That was the 5th of August. That range right there. Yeah? So when that happened, look what happened. Then it come down, corrected, tariffs, and then look what happened. You can't tell me not coming back to that. And volume on the NASDAQ, right? Just let me put it into perspective for you. Volume on the NASDAQ, right there. We are actually getting close to being up for the week. If you look at this area here, we're close to up for the week. And then we look at the last couple of days on the NASDAQ. We have had one distribution day, a couple of distribution days on the NASDAQ right here, okay? But price action has sustained itself, okay? So it's still within the range. So you're trading at all-time highs, ladies and gentlemen, and volume is still present at those levels. So quite frankly, I don't believe that the market's done. It's going to pull back, but the market is not done. Tina, if you had a wife and you would swap her for another, or would you have her as your loyal coin? Oh, you got rid of the message. Okay, I won't reply. How do you see the markets till the 14th of August? It's holiday season, ladies and gentlemen. A lot of institutional players are away from the charts. A lot of them are, but we've got a new monthly candle coming into play right now. So it's just opened today, just started today. So that's going to be, of course, another reason for the markets just to be a little bit quiet. It's holiday season. These big boys, they've been making their money all up until this point. They're going to go and enjoy themselves. That's exactly what happens. What's the significance of non-unemployment change? USD took a dive and the euro is trading quite positive. Let me explain. When you are in a macro-driven environment, okay, it says that what's good for the dollar will usually end up sending the dollar up. So if the data was positive for the non-farm payrolls, then the dollar would be going up, right? The euro comes down. Problem is, when the data is good for the dollar, it means it's bad for interest rates because there's no reason to cut because the data's coming good. Now, equally, if the data comes in bad, what does that mean? Well, it means that there's less people being offered work, which means that the economy could be compromised. Because if no people are working, then that could effectively end up demonstrating a potential slowdown in the marketplace, or should I say in the economy. Well, the Fed doesn't want to do that. It wants to maintain the expansion of the economy. But if the labor market shows weakness and then the markets pump, they're not pumping up because they're excited about the fact that people are losing their jobs. It's because the impact of people losing their jobs leads to the idea of interest rate cuts. So when we know fully that the Fed is going to cut, the market would have priced all of that benefit in. And then when it comes to the actual cut, the market will then correct. And then you'll be in a new monetary policy, a new cycle, which is easing. And then investors will then start to pull money out of various other assets. It will then start to correct. Then we will wait for the next perceived value, which means you'll then start seeing stocks trading on positive, on discount. Because quite frankly, any stock in the tech market, there is nothing stopping this tech market. Nothing. They're just buying and buying and buying and buying. Mergers and acquisitions. Everyone is consuming tech. And because tech is evolving so well, and they call it a bubble, but when you've got the money to back it, it's no longer a bubble now, is it? If the money keeps on coming in, they're going to wait for the bubble to explode. Quite frankly, ladies and gentlemen, we've been bubbling out. I'll be straight with you. We have been bubbling out since December 2022. We have not stopped going up. We've had one dip from the tariffs, and that was on, of course, the April 7th, and then it's just continued and made claim to the upside, okay? The only way a bubble is going to come into play if there is genuinely a complication when it comes to, here's an example. If China were to invade Taiwan, that, in my opinion, would violate the tech market. You tell me what would violate the tech market. Semiconductor, Taiwan, everything is coming from there. And then you got ASML, who decides who's going to have the motherboards and the chips that they make. All right? Anything happens to those two companies, your tech market is done for. And that's the truth. That's what I think would be a black swan event. China and Taiwan all day. But they wouldn't be doing it just to take over Taiwan. They'd be doing it for market share, okay? Cause a bit of a problem over 2-3 weeks and then take over, business as usual. But then, of course, you have Donald Trump. He'll be coming in with sanctions, like he's throwing sanctions on Russia right now. Everyone's all in the dark about China, working out, hold on, what's going on with their trade deal story? That's been extended for 90 days. It's another story. Tina, would you say this year has been hard to trade? It feels like it's not that many easy mode weeks. It has been very hard to trade, and I've had to reduce the amount of time that I spend in a trade. Even though I'm in trades so quick, I have to wait for moments where I can see volatility is coming in, and I'm talking at speed, especially on the NASDAQ. Now I use tick charts on the NASDAQ and I use depth of market. So I'm in for like 25, 30 ticks at a time, in and out, in and out. That's how I scalp, okay? So to me, it doesn't matter what the environment is, but you can see clearly that even on the smaller time frames, there's wicks galore. You can just see investors' lack of conviction when it comes to the market. But it's not going to stay like that, guys. We're entering into a new cycle, which is easing. Once we get that commitment from the Fed, bang, that's it. We're done. Everything comes down, short everything, and then play the markets back up again. That's how it works, okay? No, I used to do basketball, to be fair. I used to do. Why does the market pull back when quantitative easing? Well, hold on a second. If money is now going to be accessible, right, would you not want to start maneuvering assets? Think about it. Say you own 10 houses, right? You've got all that equity in the house, right? Now interest rates are going to start coming down, right? And you're like, whoa, I've got all this equity in that house. You know what? Interest rates are coming down. I'm going to get that equity out. Go and pull all that equity. You're selling. Get the equity. Sit in cash. And then once you've pulled that equity, you're now going to start shopping. And then it starts all over again because it's going to be cheaper. That means you're going to need as much collateral. Money's going to be more accessible. Okay? So that's why a lot of, to give you an analogy for it, that's why everything pulls back. They need to start maneuvering money. They're making their money on these moves up, okay? So equally, everything's going to start pulling back, consolidate, and get ready for the next run, okay? Cool. But what do you say about buy the news when it's bad for the currency and sell the news when it's good for the currency? You're in an environment that is solely reliant on the idea of whether the dollar's rates are going to be cut or they're going to be held. That makes investors think, am I going to be getting a better yield on euro or on dollar? Right now, euro has been going down because they're going to cut the interest rates again. They're not liking the fact that they're spending so much on defense. The fact that they've cut the rates so much is reducing the yield of the euro. So where am I going to go? I'm going to go where the yield's better. Dollar. Even though Trump is screaming to get interest rates down, everyone is retaining dollars and holding onto them. And that is evident with the dollar going back up. Right, it might squeeze the economy a bit, but it's not. Consumer confidence is high. Right? The economy is doing fine. I think the Fed cut comes into play. Dustbin, toilet, market will drop. No one's buying at these points. People are selling, but people are buying because they feel like they're missing out on something with this move up. That's why you see price action just creeping up slowly and slowly. There's no real big candlestick movement, but you can see that it's starting to pull some flavor, all right? But I mean, one down candle like this that we've got today on the stock market, it's nothing to be concerned about. Not until the next candle itself really drops, okay? Even this is why I'm getting stuck. There are so many situations about fundamental analysis. Even though technical analysis, I can pull it off. Right, on the Traders Reality website, there's a section, okay, a PDF section that if you become a platinum member, there is a PDF in there that explains to you how to utilize the understanding of macros, okay, and that would be checklist part 9. Yeah, checklist part 9, breaking down the macros. All right, and in that PDF, it tells you everything about what to look for when it comes to macroeconomic data, from CPI to the non-farm payrolls, understanding why gold goes up against the US dollar when there is a story of interest rates being cut, why it goes up when there is fear across the board regarding uncertainty, geopolitical uncertainty. That is there in that PDF. You get that when you're a platinum member, but you also get more on the website. But go check that out. But that PDF itself breaks it all down for you so that you can understand exactly how it works. Let me just quickly pull it up for you so you can have a look at it and give you an example of. So this is where we break it all down. That's an example, just give you basic definitions. I give you a table as well to help you understand, and then you go into it a little bit more. We talk about, what is it here? So back to the meta game, I'll go into other detail about it, talking about news releases. So it gives you a bit of an insight, and it's only what? Yeah, it's 14 pages long, and it just breaks it down for you so you can understand it from that perspective of macros, okay? But then again, like the data today, you can't, there's nothing out there that can say to you that you are going to get the fundamental analysis when the fundamental analysis itself does not match up to the fundamental analysis. Look at your ADP, came in great. Naturally, they expect the ADP to be a reflection of where we are with the non-farm. What happened? Minus 77,000. Get the fuck. Anyways, with that being said, ladies and gentlemen, listen, mad love and respect. Please be safe when you are trading. Hit the like button on the way out. Thank you so much, and I'll be tuning into you all next week. All right? Take care of yourselves, gang. Peace.